Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders. So the question on a lot of people's minds are, once the recession starts, now we don't know when it's going to start. The market will give us some warning signs. So what I mean by that is that remember, the top in 2007 took about 6 months, roughly around about 6 months. In fact, if I actually just bring up my chart here, let me just bring up a black open highlight close chart, just a blank one. Let me bring up the monthly charts here, and I'm going to squeeze back up to 2008. And remember, these are monthly charts, right? So monthly charts. Actually, you know what? Let me go to the weekly chart. Let me see if I can go. Let me see if I can see something on the weekly chart here. No, I can't go back that far. Let me see if I can. What I'm trying to do is I'm just trying to go back to the 2008. I'm just trying to use this as an example of what we could expect with the next downturn and so on and so forth. So let's go 7 day. Okay, so 7 days. So each these represents a bit over a week's worth of trading activity. All right. Now, if we have a look at this here, okay, if we have a look at the market here, we can see how the market has continued up through here. And what I'm doing right now is we can see how that it takes time for things to unfold. You know what I mean? So if we can see that we had this bear market through here, through 2008, and then we had this bull market here in 2002 or after 2008, then that's when we saw this big bull market. Make sense? So let's have a look here back in 2008. Now, before I talk about that, guys, before I talk about this here, I am running a massive Black Friday special, 75% off my entire coaching program, weekly coaching program. That means you start right now and you end at the end of next year. And also I'm throwing in 3,188 worth of bonus trading courses as well, but it's for this Black Friday only. Click on the button, click on that very first link in the description. It'll take you over to the page. You'll see all the details about what the coaching program is, what's in there, what's involved and all that sort of stuff. But I'm only doing it for a very short time frame. So go do that right now and you'll be able to see all the details there. Now, over onto 2008, look what happened here. And this is what a lot of people don't understand about the markets in itself, right? Is that it takes time for a top to form. Now, if I open up my charts a lot more through here, and I bring this back to squeeze up, this is all of 2007. Notice how it was actually throughout. That was around the 13th of the 7th. Right, and then, so it was around about the middle of the year, right, that it started to top out, didn't it? And then we had one final push to the upside, and then, as you can see, right, then we actually had this big sell-off, and then we started to round off this top, didn't it? So we actually had, so from the start of where it looks like we're starting to top out to where we actually started the bear market was around probably about almost 12 months, right? So as you can see, right, it generally takes around about 6 to 12 months, probably around 12 months more for a top to form. Then there's a bear market, okay? So we have this pretty much high point through here. Then the market started to roll down and roll up. And then we had this roll down. Then we had this roll over through here. Makes sense? So as this started to form, as you can see, this was the top. This was the bear market. Makes sense? So it takes time for a top to form. And that's why I'm saying, like if 2008 was one of the worst financial crises we've ever seen in history, wouldn't it be good to reference that, right? Even in 1987, you start to see that the market starts to, instead of stair-stepping up, right? Instead of stair-stepping up like it is here, guess what? Now it starts to stair-step down, breaking past previous lows, and then it starts to roll over. But as you can see, right, even in a severe downward market, what do we get? We get what? We get pullbacks, don't we? Look at this here. Pullback through here, pullback through here, pullback through here, right? So as you can see, it doesn't even just go straight down. It goes straight down for, what's this here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Probably about 10, which is around about what? As you can see, it went down for about 3 months. And then we had a retracement of around about 2 months. Then we went down for around about a month or so, and then we went sideways for about 3 months. So as you can see, right, as in a bear market, in a bear market, it takes time to form this top here. So we never know when the top's going to form, but the market starts to give us some warning signs. And then secondly, it takes time for the bear market to unfold. But even when the market's starting to fall down, we get these retracements, right? Like this retracement here was almost 4 months of a retracement, and then we had to move down, and then we had to move up, move down, and so on and so forth. So I want to start off this video with that to let you know that if you are freaking out right now and you're trying to pick a top because you think the crash is going to come tomorrow, that's not going to happen, okay? That's not going to happen. If you watch my prior videos that I've done this week, I put up a video of where I walk through all the different crashes that have happened this century. And the market starts to give us a stair-stepping effect in the charts. So if we have a look at that, firstly, we're nowhere near a top right now, right? Like this might be the very top in the market before we start to see like a 2008. It may or may not, right? We just got to keep monitoring that. But once we start to see this sort of action through here, especially when we start to come down through to here, and then we start to see this rollover, something like that there would say, okay, this is now a bit of a topping action through here, and now we're likely to start a bear market, right? This is what's happening here. Then we can what? Then we can, let me just go to the weekly chart here. Then we can, once we start to get that, then we can squeeze our charts up in the big picture, right? And say, okay, where's this thing likely to retrace to? So once that happens, once we start, if this is the last final blow off top here, and we start to get what I just talked about in 2008, and we start to form that topping action, we start to stair step down, we form the top one, and then we start the bear market, then I can see this thing heading back down to a minimum of 18,000, right? The first stop would be around about that. The first stop would be around about that 22,000 there. Once we start to get that rollover, and then once that happens, then it's probably likely to roll down to 18,000, probably even as low as that 16,000 there. Now, let me see if I can bring up that 17. If I bring up some Fibonacci levels from low to high, now if this is the exact high point, then there we go there, right? So we can see that 50 to 62% level is pretty much bang on smack there. Now, that 50 to 62% level is right there right now. Now that tells me that if I bring this up a bit more, let me bring this up a bit more through here. And I know this sounds really weird, but it does look like that we're going to get to around about the 30,000 here on the Dow, right? So, and the reason why is that that's just my guess anyway, on what's happening here, but that's not what this video is about, or where this market's likely to go to. I do believe we're likely to get a 30,000 now, but it may not. This may be one last push before we start the rollover and then start to see the thing there. This whole video is about when the market crashes, how far will it drop? And then we can see that these are the levels through here. So let me just take that off the screen there. So we can see that they are the main levels that you want to see there. And then down to at least 16,000 from there. Now remember guys, that's all what I just said there is probably going to take a couple of years to form. Remember, we need at least another 6 months or so for the top to form. And then we need another year or more for the whole bear market to completely unfold, and then we go from that again. Makes sense? So a lot of people have been saying, how far will the market pull back? How far will it drop? How far will we get a pullback? These are levels through here. So from there to there, that is a 40%, a 40%, possibly even down to a 50% retracement of this entire move up. Now, a lot of people have been saying absolutely ridiculous stuff like if I go to my monthly charts here, and we say, oh, well, it's probably going to hit this whole big upward movement is probably likely to, be retraced by 8,000. That may or may not happen, guys. But, and because we did actually retrace the whole 2000, this one here. But due to the fact that we've had this big massive bubble through here, this big massive upward movement through here, even on the next pullback through here, you can see that the main levels really around about that the first stop is 22,000. So we're probably likely to get something like this as it starts to unfold, right? We start to get a drop down through to here. Now, not straight away, guys. That there is maybe a few months. And we get a roll up for there, and then we probably get a roll down, maybe come back down through there, and a roll up, and then maybe come back down through to there. Because we definitely do have a lot of significant levels of support through there as well too. So that 14 to 16,000 level would probably be my target of where this is ultimately likely to end at that level there. So if you're looking at, say, on the SPY, then yeah, the SPY, I see 160 on the SPY for that, or on the S&P 500. Let me just erase everything off the screen there. We can see the main levels there is that 16,000. That's where I ultimately think it's likely to get to, and there's probably likely to be a little support around that 18,000 level. 1800 level, but probably down to 1600 would be where I would see this thing likely to continue down to, and likely to continue moving forward through. So that's how far I think we're likely to drop based on just based on these patterns through here. On the Nasdaq itself, man, the Nasdaq itself has a really awesome level of support at 5,000 level there. We're almost at 9,000 now, or 8,500 now. So I see that as a minimum target. Once we do start to unfold and we start to see this downward movement, a minimum target would be the 5,000 level for me on the Nasdaq. But again, it may not be the top yet. We're looking at this weekly chart here. We may just be getting ready for another move up before we start the roll over. Again, guys, this whole rolling over, as you can see, right, these are weekly bars through here, guys. That's a long time, you know what I mean? So just be patient with this market. If you're trying to pick a top right now, you may be right, you may be wrong. You probably, if you're trying to do that, you're probably 10% right, 90% wrong. So just wait for the market to start to give you some warning signs, like I've talked about in this video, and then we can start to see the stair-stepping effect, effect in these markets. So I hope that helps you out there, guys. Make sure you click on the very first link in the description to get that 75% off, massive 75% off sale to my private weekly coaching program. Plus, I'm throwing over $3,000 worth of trading course bonuses in that for this massive Black Friday special. Go do that right now, guys, and I'll see you in the inside.